I got a comment from David, one of my subscribers, that might scare a lot of people on one of my videos. And David said, quote, you have voided your home insurance policy if the laser causes a fire. He also said, once you exchange $1, all insurance companies consider it business if you have a homeowner's policy. That sounds terrifying, but like most scary internet advice, no offense, David, it's half true, which means it's also half wrong and it's missing context. But yeah, it can cost you everything. And I thank you for bringing up this issue because it's really not something I've heard very many people talk about in YouTube videos. And I think it's a really important issue to discuss. So the bottom line is if you use a laser for business purposes, which means selling items, you have advertising, or you're accepting payments in any form, many homeowners' policies may not cover losses caused by business equipment or business activities unless you have a home business endorsement or a rider. So I did a lot of research on this topic. Thank you, David, for the extra work. I did a bunch of research both in the online communities to see what advice people were giving, as well as actual case and insurance law. Let's hit some key clarifications here. Not every policy is automatically voided. It depends on your insurer, your state, and your policy wording. A single sale doesn't always trigger denial, but regular sales or ads or online listings absolutely can. And as David stated, detached garages are not automatically exempt. Now, when I first started doing this laser engraving, I had my laser in my shed in the backyard, not this building, but a shed. And I thought to myself, I have a lot of tools and equipment in here. And what if something does happen? So I called my agent and I talked to them and they said, yeah, $50 a year. And we'll give you a rider for that laser. And we'll cover $2,500 worth of tools. And I guess that was okay for the moment. Now, here in this building, I have an actual business policy. This is, even though it's part of my property, it has a separate address, separate utilities. It's a separate building. And I use this for business. This YouTube channel is an LLC. So I pay a little over $2,000 a year for the insurance for this building. But if you're renting, so this is another topic that David brought up, renters face additional, I guess you call it lease and liability risks. So if you're renting, always check with the landlord. If there's a fire or injury, even if your insurance policy, your renter's policy covers it, you still might face eviction from the landlord if it's an omission, if it's something you didn't tell them that you were doing. So let's talk about fire investigators. The gentleman that lives directly across the street from me here is a fire investigator. I met with him yesterday for about an hour and we discussed this video that I'm doing. And I asked him, what do you as a fire investigator look for and how do you communicate with adjusters and what do the insurance adjusters look for? And he said, number one is obviously going to be the cause of the fire. But the second most important thing they look for is the presence of commercial equipment or any type of equipment that could cause a fire. They even look for online sales or advertising to see if you're selling products, which kind of blew me away. I didn't realize they had that much communication, but the fire inspector also communicates with the code enforcement people in case there's some type of enforcement problem, which there could be if you're running a business out of a residence. So the smart move, as David warned in his comment, is to call your insurance company, explain exactly what you're doing, and ask about a home business endorsement. It might cost you anywhere from, say, $400 to about $900 a year, which is cheap insurance compared to losing your coverage entirely or getting a claim denied should something happen. So this isn't fear mongering, it's risk management. And you should know this before you burn your very first item on the laser. Here's some other misinformation I found online. And lots of people say this: it's just a hobby until I make real money. And the answer to that is both yes and no. The moment money changes hands, even once, insurance companies may see it as commercial use and not a hobby. That doesn't mean that you're automatically uninsured, but it does mean you better know what your policy says before something goes wrong, God forbid. Spending $500 a year beats explaining to an adjuster why your Etsy shop proves it wasn't just a hobby. The real world version is some claims get paid, some get denied, and a lot of the fight is over two things. And when you see me doing these quotes in this video today, that means it's legal language. The two things are, is this a business or business pursuit under the policy? And do you have an endorsement for it? So even if the house fire, let's say, is covered, are the tools and equipment treated as business property with really tiny limits? We're going to cover some concrete examples, including court cases, which I will have citations in the description along with links to them so you can read them for yourself. So I'm going to summarize them, and I'll put those citations down in the description, and you can follow those links and read the entire case law or opinion or appellate court decision, whatever it might be. But let's talk about what policies usually do in real life. Business pursuits can nuke coverage for liability and sometimes even parts of the loss. Many homeowner forms have a business definition and business pursuits or business activity exclusions that can apply when a claim arises out of a business activity. It's often litigated because arising out of can be a broad statement. There is the IRMI document down in the comments where you can learn more about this. So even when the fire loss is covered, business property limits can still be minimal. And that's why riders are so very important. A very common gotcha isn't the dwelling coverage, it's the contents. The policy may limit or exclude business property that's either stored or used at home unless you add a specific endorsement. The IRMI document discusses the standard homeowner approach and an ISO endorsement that increases business property limits or raising an internal cap, so to speak, on equipment. See that IRMI document down below. These endorsement options exist because the home-based business is very common today. From what I've researched, it's about 1 in 4 homes have some sort of home-based business today. Mainstream guidance from Business Insider describes the typical options. So, one, a small endorsement, or an in-home business policy, or a BOP, depending on your exposure. You can read this entire article from Business Insider in the description down below. Some real world examples where one ad, one sale, or side hustle mattered. Let's talk about those. The one advertisement dog bite case. Yeah, you'll see how this relates to lasers in just a moment. But this was a great case that I found where the business pursuit exclusion was upheld by the courts. So the IRMI cites Wiley versus Travelers, Oklahoma, 1974. Someone responded to an advertisement for puppies. The person was injured or bitten by a dog on the property. The insurer denied the claim under the business pursuits exclusion. The insured argued it was part of a part-time hobby-ish type thing. But the courts often uphold the exclusion in this scenario. You can read all about that case in the IRMI document down below. Why it matters for lasers? Well, if someone gets hurt or alleges your operation caused them harm, they trip and fall on the way into your garage. They can tie it into your selling stuff. The liability side is where insurers most aggressively invoke business exclusions. So let's look at another example. And again, this will relate to lasers. The example is boarders renting a room and a fire fatality. And this one falls under nondisclosure. So a Reuters legal analysis summarizes cases where insurers rescinded or denied based on material misrepresentation or omission, including Vermont Mutt versus Chow, Tennessee Court of Appeals, the year 2000. This involved a rent-paying boarder, a fire occurred, and the tenant died. And the non-disclosure of the business activity, which was renting rooms, mattered. You can read that entire Reuters article down below in the description. Why does this matter for lasers? If your insurer asks underwriting questions, like, do you have a home business? Any hazardous activities? Do you have a fireplace? Do you have a swimming pool? And you omit something, even though you didn't mean to deceive them, that often won't save you. The fight then becomes, was it material to risk pricing? So when you call an agent for a policy, they have what's called risk pricing. If you have a fireplace, you'll pay more. If you have a swimming pool, you'll pay more. If you have a Doberman, you'll pay more. And you've seen this in your homeowner's policy now. Do you have a brick building, or do you have a wood frame building? Do you have a shingled roof? Everything is considered. It's called risk pricing. And if you omit something like laser engraving, having a class 1 laser in your garage, that could be really bad for you. So let's move on. Let's talk about business pursuit. Business pursuit is often invoked by insurance companies in modern litigation, and this pattern just seems to repeat itself. So down below, the law firm and legal summaries show insurers citing business pursuits exclusions as a central denial theory in disputes like Terrell versus State Farm General. The coverage was denied based on business pursuits. That entire case is down below in the comments. The takeaway on it is, even when the insured thinks this isn't really a business, insurers regularly try that lane when there's any revenue activity whatsoever. Now, this can work both ways. Here's a real world example where the hobby versus the business line actually help the insured. Example number 4. This is a hobby. This actually won on appeal. The business exclusion didn't stick. So the IRMI document down below discusses a case where a homeowner's insurer denied a theft claim as business property, and the dispute turned on hobby versus business. The Indiana appellate court reversed the decision, finding the activity more closely related to a hobby than a business, as summarized in the IRMI document linked down below. Why does this matter for laser folks? If you truly do occasional personal projects and can document it, so you have no listings, you have no repeat sales, you have no marketing, you have no website, sometimes the business label doesn't hold, but it's very fact specific, and being prepared and getting a rider is much greater insurance that you'll always win in the case of a disaster. Now, keep in mind that that person wound up winning the appeal based on one judge's opinion, one person's opinion. And sometimes that's what this is all about. If you go to court on a claim, it's sometimes just up to one person to decide based on how that person feels that day, whether they had their second cup of coffee. I much prefer having the insurance rider and protecting myself. So let's talk about the next example, a garage fire with substantial equipment loss, where the insurer refused to pay or disputed the claim. A case write-up from a law firm down below describes a home garage fire where the insurer stated it would not pay for various reasons, with substantial equipment loss being central to the dispute. This is the laser scenario. You have a detached garage, you have expensive equipment, you have unclear personal versus business usage policy sublimits. And this is a law firm case summary. It isn't the same as a published appellate opinion, but it's a very real world illustration of how these fights start and why they get so ugly. And reading up on some of these things will open your eyes to things that you've never seen before. So what's overstated in David's comment is you avoided your home insurance policy. I think the more accurate thing to say would be some coverages may be excluded or limited, especially business property and business-related liability. And misrepresentation, nondisclosure can create rescission or a denial risk. It's not automatically void, but it can become a denial depending on facts and your particular policy language. The Reuters article down below discusses that in much greater detail. The next quote is, once you exchange $1, it's a business. Well, in practice, insurers and courts look at facts, continuity, profit motive, advertising, volume, customer traffic, things like that. The one sale line is a useful warning, but not universal legal trigger. The ad response case shows even a small operation can still be treated as a business for liability. That IRMI document is down below in the description. The next quote is, one online sales ad is all the adjuster needs to see. Well, it can be, but not always. But it's enough to raise the question and shift the burden into a paperwork fight. The cases that I've talked about that are all listed down below show how small facts, the ads, the borders, the side income, become pivotal. I highly recommend that you read those documents that I have cited down below in the description. David wasn't wrong about this. Adjusters will pull fire reports. They will search for online sales. They will ask what the equipment was used for and if you were using the equipment during the fire. And yes, you should have a home business endorsement for a few $100s a year. It just makes common sense, and it'll keep you out of the courtroom. This is not fear. It's just being responsible. But here's what was a little bit exaggerated, or you might say overstated. Policies are not instantly void. One sale doesn't magically erase the coverage on your house. Claims are decided on facts, documentation, and more importantly, policy wording. You can have 10 different people in a neighborhood that have 10 different policies, that have 10 different cover. Everyone is unique. So insurance fights are rarely instant denials and almost never cancellations, but they are slow, ugly paperwork wars. Let me tell you, I live in a hurricane zone here. I've been through 6 hurricanes in the last 35 years. And when it comes to insurance claims, they do turn into paperwork wars. So who are the people that lose? It's the ones who never ask the questions ahead of time. So here's the adult, boring, I guess you call it, correct advice. Call your insurance agent and say, I have a laser. I sometimes sell items. What endorsement do I need so there are no surprises in case of a claim? The call doesn't get you flagged. It gets you documented. Lasers don't automatically make you homeless or cause you to lose your insurance coverage. Ignorance does. And when I say ignorance, I don't mean stupidity. I mean lack of information. So don't hide it. Don't assume. Don't trust Facebook comments with your house or even this video. Do your own research. Know your policy before you burn even your very first item. Down below this video, also in the description, is a laser insurance checklist that I created, and you can download it and print it. And I created this checklist with the advice of a friend of mine who's an insurance agent. So the reason I made this checklist is simple. Insurance problems don't show up until it's too late to fix them. And you really don't want to be in that position. A checklist doesn't assume that you're doing anything wrong. It just makes sure that there are no surprises if something ever goes wrong. You don't need to panic. You don't need to guess. You just need to know what questions to ask before a claim and not after, when it can possibly be denied. Download the checklist, go through it once or twice, and if anything gives you pause, make the call. That 5-minute review can save you months of arguing or even losing a claim later on. And I think that's the end of my notes. I think that's it. Thanks, Dave. That gave me a lot of work to do in just a couple days' time. But I really enjoyed doing this research, and I think I'm going to do some more topics like this where I take all of my notes down and I pace myself and get through it without all the uhs and ums. So anyway, I hope that this video gave you some information, and I hope you enjoyed it as much as I enjoyed making it for you. And as always, I want to thank you for watching, and I'll see you in the next one.